Welcome, dear traders. We started the last trading day of the week with a recap of the Asian session. There are many factors that have impacted market sentiment this week. The upcoming election in Australia, rate hikes, geopolitical tensions, as well as falling exports and oil prices. And let's move on the highlights of the Asian session today. More and more central banks are gradually shifting to an aggressive approach to monetary policy. Analysts strongly believe that the Fed will be more hawkish than other regulators. Its pace of rate hikes will be faster compared to others. Besides, the watchdog is expected to raise the rate by 50 basis points at once. The Fed has to take such an aggressive stance as inflation has already hit the highest level in 4 decades. Besides, the inverted yield curve has also flattened, which raises concerns. Of course, the central bank needs to find a balance and engineer a soft landing. It seems feasible thanks to the strong economy and the labor market. The latter is likely to completely recover soon. However, analysts do not exclude the hard landing scenario. While economists are evaluating the prospects of a rate increases, the greenback keeps climbing. It has been growing for many months amid expectations of monetary policy tightening. Now it's the US dollar's golden hour. It has edged even higher following hawkish statements of Fed members. However, market participants are well aware that periods of rapid growth may be followed by periods of drastic drops. The greenback has rallied to early highs. However, it may slow down its rally because of the decisions of other central banks to hike the key rate. They could also accelerate the pace of monetary policy tightening. If so, it's sure to affect the US currency. Now it's rising steadily against its main rivals. This week, the US dollar index has already gained 1.3%. In the Asian session, it continued its winning streak. At the time of making this video, the index was trading at 99.83. The price reached a new 2-year high against other currencies and a 1-year high against the euro, and it was also fluctuating in the range of 99.78 and 99.99 during the Asian trade. So there is a high chance of a rise above this range in the US session. The US dollar has also asserted strength against the yen. It approached the weekly high of 124.23. Apart from that, the dollar-yen pair is getting close to last month's high of 125.10. This level is also a 7-year high. In the Asian session, the price continued to move in the green zone, but at some point, it entered the consolidation phase within the range of 123.64 and 124.23. At the time of making this video, the pair was already trading at 124.09. The yen may weaken considerably as long as there is a rate gap between the Bank of Japan and the Fed. However, in April, the Japanese currency managed to regain momentum after falling in March. Perhaps the main reason was the Bank of Japan's decision to buy an unlimited amount of 10-year bonds at a fixed rate to curb a surge in long-term interest rates. The regulator once again showed its deterioration to resist a global shift towards tighter monetary policy. Analysts point out that the yen is highly undervalued now. They believe that the yen, as a safe haven asset, may attract long-term investors. The Aussie is trading steadily against the US dollar. Nevertheless, it's losing steam after the AUD-USD pair has sharply declined to 0.7660 this week from the high of June 2021. The Australian dollar is also facing pressure as the Reserve Bank of Australia has postponed the rate hike after the federal election. Drop in commodity prices were also a bearish factor. Lockdown in Shanghai, one of Australia's largest trading partners, also affected demand for commodities. For this reason, the pair went down in the Asian session and even hit a new low. The pair tested the support level of 0.7458. After that, it increased slightly to 0.7465, and it's now trading in the downward corridor of 0.7459 and 0.7498. And that's all for now. Thanks for watching. Feel free to leave your comments and ask questions down below. Our analysts will be happy to address them. Don't miss our next video review, and see you soon.